Hey guys, this video is going to explain to you guys how to get a sniper entry on gold, Nasdaq, and US 30. Now, the previous video, I explained to you guys how to actually draw these levels on. So if you haven't watched the video, do go watch it. It's a video before this one. Now, also guys, the entries I'm explaining on this, I'm actually using it on live stream in the morning. So it's all based on proof, right? So if you guys want to join as well, you're more than welcome to join. It starts 9 a.m. the morning South African time. Also, that being said, guys, please do like this video, subscribe, and don't forget to join the free group. The links in the bio so you can get all the updates when something is posted. Okay, guys. With that being said, guys, the very first thing you want to know is the three type of candles we have. We have a continuation candle, a slowdown candle, and a reverse candle. When the market comes to these levels, you want to be on a 30-minute time frame to see if it's closing above it or is it closing below it. For example, this one is a bar one because the market closed right above it. So it means that you want to be waiting on a lower time frame for a possible buys from here up. Okay, guys. So once that is done, you can go on any of these time frames, lower time frames. Like I go on the 5 minute, 3 minute, 2 minute, and 1 minute. So any of those you can use, right? Choose one of those you can actually follow. So let's say you go on the 5 minute time frame, all you're waiting for is market to pull down into here. Once the market comes down into there, you want to see how it comes into the easy coming to the rejection onto it. So you see the market's rejecting. You want to see the next candle or few other candles to be slowed down, small doji candles. So let's see. Here you can see the first candle that comes in is actually a doji. What you want to do is actually you want to maybe box this off as the first candle right there as a guidance, you can say it, right? Once the market then breaks above that big bullish candle, that is the time where you want to look for a candle to come back into here and then take a buy up, right? So let's wait for this to play out. There we go. Actually, market closed massively bullish above, out of this area, closes out of this range, or when for market to pull back into you. Once market pull back into you, that is when you start taking your buys all the way up. Okay, guys, that is the idea what you want to have around with this sniper entries. Very precise. Now I'm gonna try to find more examples for you guys on for a sell example so that you guys see also a sell and I'll show you more other examples for buys and sells. Okay, guys, let's get into it and I'll show you guys one on gold as well. Okay, so look at this one, right, guys? So here we are right now coming towards a key area, a day level. Remember, you must watch how it approaches it. So look here, more comes into it and right on the closes right on it. Okay, so that's very interesting. It doesn't close above it massively, it just closes right on it. Now, if this happens, what I want to see is how the next candle opens. Actually market impulses down. That is showing me, it actually wants to go to the downside. Once that happens, right, I'll go down to the lower time frame, and then all I'm gonna wait for is, to find some sort of candles, or let's say on this area here. So when it comes right back towards, for instance, here, I can get in for a sell. So to give you guys an example, let's see, there it comes right into it. So market comes in impulsively. That is not good. We want to see market come back down, give us some sort of slowdown candle. There we go. There's a slowdown candle. So you can see once market gives you a slowdown candle, now you can box it off. It's at that area. Okay, guys. Now, all you're going to do is simply wait for an impulse to the downside. So market spikes. We want to see impulse to the downside. Closes outside. That is a close outside. Okay, guys. Once I get a simple move, literally, because since it closed just below it, I would say even this could be an impulsive entry. Again, guys, remember you can put your stops at the high just to be safe, and then you take it all the way to the downside for a 1 to 2. But targeting first that level, and then eventually to these levels here. So let's say 1 to 2. Okay, guys, that's simple. They retest, you get in. Let's say you got in. So as it came in, you tested, you got in right there. Okay, guys. Once happens, the market goes in a little bit of drawdown, you're still holding, and eventually maybe taps you out. Let's say you took a loss. It's fine. The case is you're still looking at this thing to go to the downside. Now, with that being said, guys, you have another slowdown candle right on top there. All you're waiting for is market to impulse to the downside. Again, guys, looking for a trade to the downside. Okay, there we go. Not the one. Eventually, that is the one. Still holding, actually. I thought it was going to be the one, actually. Right there. That is the one right there. Market clearly breaks that area. So now what you can do is you can either have a entry as a high risk entry. As soon as it closes, you get in, or you wait for the market just to pull back on the previous candle week. You're right there, but you're still gonna have your stops at the high right there. Okay, guys, and this should be more or less your type of entries you should be getting. So you could have get in either here, your stops is still gonna be on top, or you're gonna get in when it comes back to retest on this one right here. So you're gonna be in if it's there, or you can have the one where it actually gets a right on that one there. So it doesn't really matter, but your stops is still gonna be there. It comes down to you, how you feel about your trade. So for me, as soon as market comes and retests, bam, I get in usually around that one and there. So my entry is either this one or the one right on top there. Okay, guys, it depends on this. So this one, I would actually take this one right here. So I've been drawdown, and eventually what happens is market pushes down again. So let's say you missed this entries, you had another opportunity to get here, because look at it, the market had another slowdown candle right there. Okay, guys, and it impulsed out. So you could have had an impulsive entry right there, stop set above there, and you could still have this specific move to the downside. Okay, guys, you could still had this specific move to the downside. This is basically a great entry for possible sells. Now, with that being said, guys, let me show you guys a simple trade that I was calling out today on stream. And I did mention to them, I said, look, you guys, at this specific level, we're going to get a sell. Now, on the 30-minute time frame, you can look at this, you know, check this out. A clear break, retest. Now, when it retested here, right there, when it came back to retest it, just check this out on the 5-minute time frame. When it came right back to retest, watch it happen. So it came there. Look, it impulsed, so you don't take a trade. But it's a slowdown candle. So right here we have a slowdown candle. Okay, watch what happens. There we have an impulse. Okay, so let's say you are waiting. You either take the impulse entry, but remember your stops are going to be bigger than usual. So that's why I don't always take the impulse entry. It depends on how big the candle is impulsing out. But usually I want to get an entry around there. So this is more or less what you want to be looking for. And you want to take a trade for 1 or 2. Now, in this instance, you can see market came back up, failed to come there, and actually dropped all the way down. Now, there's going to be times you get entries like this when market just misses your entry. No entry is going to be perfect. But again, guys, you can get a snap entry if you just follow this every single time. Okay. So I'm going to give you guys more examples. Here's another one. Okay. Let's just go on to this one to show you guys what I'm talking about. Now, if maybe going on the 30-minute time frame, you will see that the market actually closes above this one. So this is another example. You can see how market closes above this beautifully. Bam, there we go. So you go down to the 5-minute time frame. On a 5-minute time frame, you're gonna wait for market to come right back into this area. And when it comes there, guys, you want to see how it comes. See there, market closes right on there. So we want to see a slowdown. Right there we have a slowdown candle. So you can see market is 2 weeks on both sides. It's a slowdown candle. You can box that off, and that is your basically your aid to say, okay, if a candle closes impulsively above this, then that could be a impulsive entry, or you can wait for conservative entry and simply wait for market to come right back to yields here, and then you take a trade up. Okay, guys, that is what you want to be looking for. So market goes back down, rejects us. You're waiting, market holds, still holding that same area, right? No closes impulsively, and you're still waiting. Still holding, it's holding this entire area still, which is quite good. It's a range. I love this when markets ranging beautifully like this. Eventually, you'll see market impulses off in one direction. Oh my gosh, this is quite interesting. Now, you could have missed the entry actually. I think you can wait for entry to come back. So let's see if it does come back all the way down towards this area, and actually there we go. It actually missed. So let's see the candle before there. Let's see. I think it missed that entry. So yeah, there we go. So you could have actually have a entry right there. You could have put your stops at the lows, right? Just to be safe. And you could have taken it for 1 or 2. So this could have been a trade actually, right? You could have looked for a trade like this, and you could have been in a clean trade for 1:2. Okay, guys. So yes, you might have seen this, missed out that because I mean this was such an impulsive move, but you still wait just for it to come all the way back down. Once it comes back down, you have this beautiful area, and like this is where I'm taking my trade off for possible buys or sells. Okay, guys, that is a simple way to get a sniper entry on the market. I hope you guys enjoyed this video. Let me maybe show you guys one more on US30. Okay, now this is actually something we are actually really waiting for. Now let me draw all the levels for you guys so I can show you what I'm talking about. It's very simple, guys. Go, let's go to monthly and we do this together. Okay, so on the monthly time frame, you're gonna do this. Actually, you need to be watching that. Watch the other video. I think it's best to watch the other video. Go watch the video before this because it's best. That way, you don't get confused, right? But anyway, guys, with that being said, let's do just a quick entry one, right? I think I'm not gonna do the whole video or entry strategy, but I mean the old strategy, but I'll just do the entry itself, right? Wait. Nah, let me just be a good person. The full strategy, right? So once you have the previous month's candle, you're gonna go and put the high, man, the high right there. Then you put the low right there. Right, there we go. Once that is done, you're gonna put in like this. Okay. Now the previous video explains this, but let's do this. So the middle 50% is gonna be your monthly 50%. Then we have the 75%, which is gonna be your weekly level. Okay, and then we're gonna have another level at 25%, which is gonna be your weekly level, and then this 7% is gonna be your daily level. Okay, and then we're gonna have the 70. No, wait, I'm sorry. Let's go back. I nearly messed this up. So we have monthly, weekly, and between monthly and weekly we have daily. Yes, right. There we go. Daily level, and then we have here daily level. Yeah, I thought I messed up. There we go. Daily level, and in between here you have daily level, and in between here you got daily level. Okay. So once you have these levels on, like I said, go watch the previous video for the full explanation. I'm just doing it very quick right now, but I'm gonna show you guys how um I do it. Now, once the market breaks the high, right? Once the market breaks the high, all you gotta do is now then take the previous size of this, which is about that size, and now you can drop on your other levels, use new areas we're going into. Okay, guys, these are new territories we are approaching. With that being said, let's go down to 30-minute time frame. So on a 30-minute time frame, all you're waiting for is clear breaks above or below. Okay, so let's see how market actually is moving. Now, here's a great example. You can see basically market shoots all the way up. There's no test, but eventually it does come test here. Now, if you go to this area over here on a lower time frame, let's go to it on a 5 minute. On a 5 minute time frame, you'll find out there when the market came into the came with rejection. But let's say it came right here, bam, rejection. Okay, you see rejection, slowdown candles over there. So once this happened, you have a slowdown candle. You know what you do is just box that off, and then you have a range. Also, keep in mind, guys, when it does break, you want to see is it actually breaking out the entire range impulsively. It needs to be impulsively, guys. Okay, so it's holding this technically impulsively break. We want to see a massive move. There we go. That's more of an impulse. Now, what you want is market just to come back into the area. When it comes back into the area, you want to be taking a trade. Okay, guys. So that is the ideal way we want to get a trade. So let's watch what happens. I'm gonna zoom, speed it up for you. Okay, market is doing its thing. The next day, you wake up, this area is untested. So market fails it. However, that is going to be one of those days where market just didn't come into it, unfortunately. So you can see it didn't come into it, it missed it. Market break this one, it's fine. 30-minute time frame closed. You go to 5-minute time frame, and then you're looking for a retest back onto it. Market is playing. Let's wait. Let's see. Uh, just waiting for a sign. Let's go to 30-minute time frame just to speed us up a little bit. There we go. So eventually marketing just breaks above. So yes, you'll be like, okay, but what happens to all this? That's what we're gonna talk about again, guys, on the next video, how to trade in between these levels. Okay. But let's say for instance we have here a clean break. So market breaks this one specifically, right? Breaks this one on a lower time frame, like the 5-minute time frame. You want to look for entries again. So remember what I said, same things as always. Let's see how that goes. We have a doji impulse. There's an impulse, so we have a doji right here actually. A doji, there's an impulse. We're looking for a retest back into here and then get in. Okay, guys. So this is what you want to be looking for. So in fact, actual fact, we've been waiting for this trade for the day. However, there was no entry whatsoever as of yet. So that means that when you wait for this entry like this, I just have to be patient and be patient. And I'm trying to show you guys the most transparent way of trading. That you're gonna be missing some entries, you're gonna be getting some clean entries where market just goes your direction and release some stop losses. You can't stop that from the market. Okay, guys. So I hope this give you maybe some perspective as well. That even though you have the most snipers entry, it's about being patient for your entry. So with that being said, guys, hope you guys enjoyed this video. With that being said, your mentor Shakil Samai, I'm about to sign out. Please don't like this video and do join the live streams. Again, peace, love, happiness. Your mentor Shakil Samai. I'm signing out. Cheers, guys. I'll see you guys on the other side.